All right, so PayPal just reported earnings, and I'm going to review them live with you guys. The stock is currently up right around 2%. Had a brief look at them already, and personally, I thought the stock would actually be up more considering how much it's sold off. But as I stated before, this is a mature company. I think people are expecting these explosions out of the stock. Now, I personally thought it should be up about 5 or 6%, but yeah, we're going to take a look here. When we look at the price action of PayPal, kind of selling off from $100 down to $50 a share, personally, we have a price target on the stock, an ideal price target on the stock at $50.86. And that's with growth rates that I felt were really achievable here. And that's going to be 8% growth rates, 5% growth rates, and 4% growth rates. So, for me, I think that this is a more mature company. I think the competition is picking up. And I think you have to look at this as more of a mature value type, slower growth play. And so buying it at the right price makes a tremendous amount of sense. They did appoint a new CFO today in Jamie Miller, and solid third quarter performance on both revenue and EPS. Obviously, these are promotional pieces, but we're just going to breeze through it really quick. Total payment volume did reach $387 billion, growing 15% and 13% on an FX neutral basis. That's extremely high compared to what I thought they were going to do. I thought it would be closer to being flat, 5-6% growth maybe. And so the fact that there's still a tremendous amount of transactions taking place on the platform is pretty interesting. Now, I did say, however, I wouldn't be surprised if there was a lot of crypto purchases taking place, as this is one of the companies that has a shovel, and this is one of the reasons why I want to own them. I specifically don't want to own crypto, but like the aspect of being able to earn money on people that do want to own crypto. And so it gives me somewhat of a distant exposure to cryptocurrencies, and the fact that they do have some on their balance sheet as well. GAAP operating income came in at $1.2 billion, growing 4%. And so the fact that they're showing the GAAP side of things growing at 4%, very, very nice. Now, GAAP EPS was down, and I'm guessing this is going to be a margin conversation because if they are getting that much transactions taking place, if they are getting growth, and yet EPS is coming in light on a GAAP basis, that to me could be a margin headwind. Operating cash flow came in at $1.3 billion, with free cash flow coming in at $1.1 billion. So still decent free cash flow here. We definitely want to see that $5 to $6 billion of free cash flow consistently coming down into the bottom line on this company. They're still projecting out growth, which is good to see on an FX base. They're projecting 7 to 8%. Q4 GAAP EPS is expected to be $1.20, 93 cents this quarter, and projected to do $1.20 next quarter. And so full year 2023 on a GAAP basis, they're projected to do right around 375. So let's just even err on some caution here, and let's just say it's a light quarter, and they do, currently the stock's trading around $52 a share, and let's just say it's a light quarter, and they end up doing 350. Stock is trading at 14.8 times earnings on a GAAP basis and still has some decent growth behind it. So to me, this is pretty solid overall, very undervalued to its peers, and I wouldn't be surprised if the stock starts appreciating in value here, kind of showing that they are maintaining growth and they are maintaining hold of the market share here. Full year 2023 repurchases expected to reach $5 billion of repurchasing stock. Phenomenal to see here. This is the most efficient way to return capital to shareholders is through stock repurchases, and that's exactly what they're doing. I think if they had stronger GAAP EPS and they beat a little bit bigger on both top and bottom line, showed a little bit more growth. And like I said, I do think that there is some sort of margin problem here that we're going to take a look at. But as of right now, I definitely think this is a solid B. If they did all those other things, I would give it an A+. So when we look at GAAP EPS here at 93 cents, down 19% year over year compared to last year, balance sheet got stronger, now having $15.4 billion of cash versus $10 billion of debt. So we're going to update that in our analysis as well. So as I stated before, operating margins are shrinking. Okay. So want to make this known. Operating margins went from 16.3 down to 15.7, but that's going to be nullified. That's going to be leveled off here with the growth aspect that they were getting, because net revenues did come in 8% higher. So that's a decent offset. We're not going to notice 59 basis points all that much, but we want to make sure that this is not a long-term trajectory of operating margins keep shrinking here. And free cash flow not as strong as it was year prior. Closer to probably a B- on this report. Let's see what the stock is currently doing. 1.2%, so not a big move here. And, overall, I would say I'm pretty disappointed that we're not seeing a bigger move in the stock. I think that there is value here, especially with them buying back stock, the balance sheet getting a little bit cleaner. Margins are coming down a little bit, but not drastic margin compression here. They're still keeping double-digit margins. So I think there's many positives to take away from this. So I added some cash to their balance sheet. I'm going to bump down. This is an older analysis, so I do have to update the dates on here. I am going to compress margins as well. Now, as I've been stating before, I want to see them build out that balance sheet just like they're doing. I'd rather see less buybacks and actually possibly making some sort of interesting acquisition to reignite revenue growth, top line revenue growth, and possibly make an acquisition that could expand margins as well, because those are the two questions and two concerns that I personally have for the company. So I actually updated everything here, and I get a fair market price around $52 a share today, with 7% growth rates, 5% growth rates, and 4% growth rates, updating the balance sheet as well. And the other thing I actually have to do is take out some shares as they're buying back stock. So we're going to do that as well. And that gives us a $53.50 price target personally for me on PayPal on currently what they're doing here, right around that mid to high single digit growth rates, buying back stock, and still keeping a pretty good share on what's going on here. So we'll take one last look at the overall market performance. And yeah, the performance on this is just awful. So hopefully there's something they can do in the conference call here. But, I think with how many shares they're buying back, with how clean the balance sheet is, the fact that they're going to have strong EPS going into Q4 when a lot of companies right now don't even know what Q4 is going to look like, I would say that this is a B grade on an earnings. And my biggest concern is definitely going to be margin compression taking place as we're seeing on the company. But overall, I think it's a pretty solid report. And I think the stock is fair priced right now. The question is going to be on the conference call, what's going to eliminate the downward trend on margins, and what could reignite revenue growth? Those would be two questions that I personally have. So hopefully everybody enjoyed that, and we will see you in the next one.